Hello there. Election is over, markets are moving, and that volatility is something that you need to know how to navigate, right? New president is elected in the United States, and we want to take a look at the marketplace to know where the next move is happening. We're gonna start this video as we do it every single week here at Daily Pips Trading, where me, Ignas, goes through every single security that is gonna be tradable this upcoming week, starting with economic news calendar. So let's dive in. We have a Veterans Day starting off the week, so Monday there's gonna be no trading because United States of America is in a holiday. We're gonna avoid trading on the morning hours, AM sessions on Tuesday. Because of that holiday, we're gonna allow the marketplace to go without us, focusing our most of the risk for PM session on Tuesday. CPI releases on Wednesday. CPI is gonna be a very volatile event where the marketplace is just gonna rip and go without us, but we're gonna focus our risk at 9:30 market open because CPI is a very one-sided event, and we know for a fact that volatility is gonna push the marketplace towards one side. So we're gonna be looking for the market to come back towards other side of the liquidity when it all comes down. Thursday, sadly, Fed Chair Powell speaks. Keep an eye on that. It's gonna be a very difficult day to navigate because of him giving his speech and presentation. Friday, full on risk. Feel free to engage with the marketplace on Friday. So if you like already what we're doing with the economic news calendar and how we're presenting the risk management system around it, leave a like to the video, subscribe to the channel, and if you're not there, come pass by to the Discord community itself. We're doing this every single week. We're doing this every single day. And of course, we gathered for the charts itself. So let's dive in, starting with bonds. We've been expecting the bonds to push lower for quite a while, and my expectation is residing below 116s. I would love to see the price going lower, but at the same time, you see how wild, sorry for the pause, wild the marketplace is. This volume imbalance still holding in the marketplace, but I'm watching this and I can't believe in a way how difficult of a read the bonds are giving us. Yet, you gotta stick to the initial analysis where we know that sell side has to be taken before the marketplace starts pushing higher, right? So, I'm gonna say it out loud like we did it last week. Everything below this volume imbalance is gonna be remaining bearish, drawing the price towards 116s and below. And my interest for higher prices comes into play only and only if this daily fair value gap gets inverted. I'm gonna be still interested in lower prices possibly coming into the place if we come up here slowly. But if we start diving through and closing above, what is it? 119.18 sharp, my interest goes towards higher prices, towards the marketplace drawing into this daily imbalance and the breaker block residing up above. Coming into dollar index, we're watching how daily liquidity is being run through. We targeted this, calling the market to deliver 104,799 in the last weekly outlook. I love the fact that the marketplace delivered, and we just came into this daily fair value gap as well. Now, allowing the marketplace to make a decision. In my mind, we should still draw towards daily liquidity residing above at 106.126. But for that, we need to beat this daily imbalance. Right now, the situation is perfect because we have an imbalance residing down below, which is gonna allow us to stay calm, to say, okay, we know what to expect from the marketplace because everything above it is gonna be remaining bullish for us. Close below it, only then implements a possible shorting opportunities on dollar. I'm still expecting higher prices. I'm still expecting 106.126 to deliver, but closing below this daily imbalance is gonna become quite interesting. Euro, daily liquidity almost there, right? We've been hoping for lower prices for quite a while this week. Weekly imbalance getting inverted, right? We called for this weekly imbalance to get inverted, for this to become an inversion for value gap, and now we're simply watching 1.06, 666, so many sixes, but very sharp level to deliver. Again, just like we have it on dollar index, everything below this daily fair value gap from 6th of November is going to remain bearish. Closing above it is going to bring us into the breaker block residing up above at 1.10020 sharp, but I'm not keen on that. I wouldn't be too keen on that, because what I want to see sell side being run through and then the marketplace making a turn. I would love, just like we explained on dollar, for liquidity to be run through up there before going any lower, because I want dollar index to start crashing actually before the end of this year. So the marketplace allowing us to stay above now current fair value gaps and to run through the buy stops resting above on dollar would allow euro to crash a little bit lower below daily liquidity residing below, and then the move to the upside hopefully would start. However unfortunate it is, we've been calling for higher prices on pound to start pounding, in a way, no pun intended, but we're not getting it. This order block on the daily chart is holding the price in for 2 weeks now. Daily levels, weekly levels, everything that would bring us into intention for higher prices to be delivered, still holding in the price in place. So we can't call for bearishness here. We simply can't. So what I'm watching, gun to my head, again, just like we've been saying it for 4 weeks in a row now, expectation is not changing. This is way too smooth. I want this to be run through away from the marketplace, daily imbalance to get delivered as well. So we will stick to the same analysis, and we are only gonna be looking for long positions here on GBP USD. What can I say about ES? What can I say about S&P 500? All-time highs, baby, you know? Now, when we are trading at an all-time high condition, the very simple thing and simple factor at the market while looking at the marketplace to consider is the fact that we never look for a top. We're not expecting the marketplace to make a turn because it just started trading higher. We will have to dive deeper into lower time frames for that. For sure, you have to put down sell side resting down below into your chart. We have to keep calm and not get too attached for lower prices immediately, because we are very much interested to see what bonds, what dollar is going to do initially in this upcoming week, right? CPI releasing on Wednesday, might be some funny events happening because of that on ES, but we're not looking for a top. Massive imbalance residing here. We're not looking for any zones or any PDA arrays to hold in the price here, but at the same time, why not retrace before going any higher? But what I'm gonna do, I'm gonna give my analysis on Monday. So if you're not on Discord, you should be there. I'm gonna give my analysis on lower time frame on Discord on Monday, so stay tuned. It's gonna be interesting to see lower time frame levels, to see whether I'm gonna make a decision to look for shorting opportunities if something gets broken or not. Nasdaq finally delivered all-time highs. We haven't been there for half a year pretty much, you know, but all-time highs delivered. Daily imbalance here inverted, and we're simply not gonna be looking for a top. There's a massive possibility for the marketplace to come into this weekly imbalance before going higher. Alright, so a retracement is expected, but again, just like with ES, when we are at all-time highs, we're not looking for the marketplace to make a turn only because of that. Another scenario, when buy stops are being run through, there's a massive possibility of the marketplace going higher. Now here, if it does, possibly it's only a small retracement. Everything will depend on bonds, everything will depend on dollar, making the initial move for indices to follow. All right. With this in mind, taking a look at Bitcoin real quick, imbalance right here is something that we're gonna be watching throughout this upcoming week, because we don't want this to get broken. Yes, we have a volume imbalance residing down below. I'm watching the futures index here for Bitcoin delivery contract December, just like we did with Nasdaq and ES. But if the market goes higher, if it wants to go to the moon, right, this imbalance has to hold it in. But my expectation, guys, if the bonds start running higher, if dollar starts crashing, this is gonna become interesting. right? Knowing the fact that this has to move against dollar index itself, right? It's never moving together. It's going to be very interesting to see how high the Bitcoin is going to print. Can it print? Yes, for sure it can, but this imbalance has to hold in the price in place. And this is going to be it from me, Ignas at Daily Pips Trading. I very much hope you find this insightful, and if you do, like always, please leave a like to this video. If you aren't subscribed yet, subscribe to the channel. Comment down below, of course, if you want any other analysis on any charts covered for you next upcoming weekend. And for now, I'm gonna wish you to stay safe and good luck and good trading. Bye.